All right, everybody. Baba Yaga here. Just wanted to run through. We haven't done as many of these trade reviews as we probably need to be doing, so we're gonna kick one up today from the RTH session. Talk through the trades that I did take and some of why I took them. So let's jump into that. All right, so right off the bat, right out of the open, um, you can see that we no tick above the OR, no tick above the OR, but we didn't really tick that much below. And what this blue line here is 13,410. That was the top of Friday's balance, I believe, is what that was. Let me double check on TPO real quick. Um, yeah, top of Friday's balance, roughly 410. And so it was kind of a light area of interest for me. And so being just a few minutes into the market and seeing um, this aggressive seller here, this aggressive seller with some size, this some size, some size, some size, aggressive delta. These candles that are marked as greater than 200 negative delta here in each one of these candles. So that selling coming in, I interpret it as like an attempt to hold below um, the Friday's value. So I think I said in the chat, like, I'm going to give this a run here in the middle of OR for an attempt to break higher. And ideally, this trade would have ran up, tested, rebid off of OR high and continued, right? That would have been the most bullish scenario. And since we were opening in the way that we did, I wanted to give the bullish scenario a chance, being above 370, which is the top of the old balance area. Wanted to give bulls a chance. So you can see that I took that trade here, no scales into OR, aggressive sell, boom, stopped out, immediate reentry. That immediate reentry was based on the watching the Dom in this area, and we just kind of kept sneaking bids in, and so fired off along here and same size as this trade. So this was obviously a full stop, no scales off. I think I was 6 lots there, 6 lots here, and really liked the look of this, kind of running over these sellers. So as we peeked through them here, scaled a little bit for what is that, 97 to 12, so maybe like 14, 15 points. And then scaled a little more through OR um, at um, at like 10 more points after that. It's like 25 points roughly, 96 to 96, 06, 16. Yeah, so 20 something points, 22, 25 points, something like that. And so we got a couple chunks off. We got um, a chunk of this stop back, so that's nice. And then we just scaled the rest was like if we break back below the OR, we just fall out of that trade. And you can see we stop out in front of entry, and you can see that waterfall down was probably um, not wasn't the only one doing that, right? Now, the OR short trade was definitely in play. And I know that we've talked about doing an OR video, and we will do one. But one of the things about trading the OR for me is like to take like I don't like to take a short with a runway that is you know less than 50 points. And to me, the 70 spot being just 30 points lower, as you can see, was a place that I was interested to be long at or be long back through. Um, so we rolled down. So I wasn't interested in the short trade, even though it did present itself. As soon as I saw aggressive sellers, speed of tape, kind of slowing from the sell side for a second. A couple of big sell orders. I mean, as soon as those hit, I just so I price risk that trade. Same position size as before, off of 70. Anticipation trade really, and kind of to my plan of like want to be a buyer at 70. Um, Immediately stopped out on that. Probably could have given this a second to develop and dodge this stop, but uh, this was very unproductive, and there was a lot of that was absorbed pretty nicely, and so I wanted to give that a chance. Now, just as a note, one of the things that we could talk about is you kind of have let me do this real quick. You kind of have this idea here. So let's just talk about like efficiency that could have been a little better. Um, would have been um, instead of risking into just off of a level like that, and then taking a full 10-point stop. Um, would have taken a little more patience. I really thought we might rocket ship out of here with this look, so that's why I that's why I put the risk on that way. But if you think, I saw there's a trader with like SMB Capital who talks about this idea, and I think it's a really cool idea. I don't not all the ways that he speaks of this idea I think are um, you know the way that I would think of it, but he talks about trading on the right side um, of the V. And so when you come into an area like this, we talk about it through the language of rebids. So we bid out and then we bid again. So the entry could have been there, stop, below that low. Would have been a better a way to do that. So again, you'd have had to be kind of quick with it, but the idea, and just to be a little more efficient on this trade, would have been to enter here. Let me turn that around. Oh boy, oh boy. Um, would have been to enter here, right? Would stop, down here on new lows, right? So as you're thinking of like trade methodology, this was definitely a price risk. As soon as I saw that large seller, I was like, oh, he's done messed up. But in reality, that this opportunity here would have been the one, right? A little better risk management, a little more patient, and so being on the right side again of a potential V. Now, this one broke through, right? Um, but your trade locations, especially if you're struggling um, or whatever, you want to be on the right side of that V versus what Banks and I call innovative trades, which is what my entry was. So this entry was just innovative. There was a little signaling, and this was a level, but this was a lot closer to just innovating along, being the first there, making it happen. Um, and yeah, so but again, if you're struggling with entries and things like that, just take a little more patience on, wait a little bit, um, and try to be on the other side of the steepest part of the pullback and participate here, and mitigate your risk tight. If it peaks below that and recovers it, it's a re-entry, um, you know, like here. So this trade was on the right side of the V. See, right? Injury was here, risk was here, a lot tighter. And this is the V. So enter on the right side of the V for the buys. Um, if we go down here, we can see that I don't know if I was distracted or if I got a bad feel or what. This is not a great entry. But it is on the right side of the V. We had some slowing of sell side and buyers kind of absorbing and stepping in here that kicked off this background paint. Um, this 350 150 was only 75 cents, I think, above overnight low. ES had already broken overnight low. I think the Dow had as well. So this was the tricky spot. I was thinking we'd break back below. We didn't. When we got this seller here get stuffed, that's when I was really interested. And I think maybe this happened kind of quick. And so that's why my feel was there. But again, trading, comparing the two entries, we're on the right side of the V here at 62. We can give the stop down to almost new lows to 52, stay within that 10 points, and then get paid. And this trade played out nicely. It's a Monday, so I traded the same. I traded the same as I'd been all day, so just 6 slots. And normally my brackets um, are going to be a little wider than this, but today I scaled a little quicker because it's a Monday. So we scaled we scaled into these aggressive sells at like 78, I think it was, from 60, call it 64, 62, something like that, 65, call it 65. So about 65, 75, 77. It's like 12, 13 points on the first scale. Pretty tight, um, but it's Monday. And then into like 85. So like 20 points on the next scale. And then 402 or something like that. So now we're getting into like, 40 points roughly. And then this scale, I think, was right around 80 points here. And normally I'll leave a runner for 100 points, but I was out of 5 lots by the time we got here. So I think it was 2, 1, 2, and then 1. Or, yeah, 2, 3, 4, 5, 6. Yeah. So that was the trade. And again, the entry was area of interest. We couldn't make a new low compared to overnight low. They stuffed them. Order flow sort of shifted. Aggressive buyer came in. We were catching a bid on the NQ. We were catching a bid on the Dow. I think Banks was watching or was long. And then again, this misplaced sell, like we want to use that as kind of awareness of um, either either a seller just dove on it hoping to push it through, or this buyer's stops got hit, so they liquidity grabbed this guy and then went. Either way, um, was a great, little marker on the whole deal. And then once I'm in a trade, something pretty substantial would have to show up for me to exit outside of my bracket. So it was a little talk about brackets, and we'll rope this into this video. Because we'll try to keep this to 15 minutes. So if you're thinking about brackets and risk management and all of that stuff, a couple things that I would encourage you to do is trade a size that doesn't really get you that excited. Um, Trade a size that is, not a complete yawn, but if you're in a hard spot, maybe size it down to where it literally doesn't matter. If you take a stop, doesn't matter. If you make the full bracket, it doesn't matter. Scale down to something that alleviates the pressure to make something happen or to not lose, so that you can get into a headspace where you're free to trade. So like some people consider this hard, like entry, stop, re-entry, like that's difficult, but we can see like entry, stop, re-entry, go. There's times where you're quick to it by a certain measure, and for me today that was being 10 points ahead of, I was kind of like, let's go. um, but if you're not trading a size that's detrimental, to you or to your account, you just fire one back off, man. What's the worst that happens? You take another stop. It's not the end of the world, or it shouldn't be. And so I'd say trade a size that doesn't expose you to having to be as rigorous mentally until you kind of grow that muscle, that side of your capacities when it comes to trading. The other thing I would say is I came up with 10-point stops because looking at data, just looking at trades that I took, trades that I won, trades that I lost, it seemed like 10 points was about where I need to be. At one point, I had tightened it down to about 7 points, um, but in currently over the last 6 months or so, I've been trading with 10-point stops. Um, what I would say is your stop is dictated by your ability to trigger into an entry and your brackets. Like, where are you scaling? So, the quality of entry is directly correlated to how much heat you choose to give something and the nature of which you're able to fire off a trade, and then the quality of that zone. So, for instance, like this area right here is considered no man's land to me, like 84 to 92. I didn't have anything there. Okay. And so, if I was like, well, I took a great trade and it didn't yield anything, this was a spot that I had something and it still didn't yield anything. I didn't have anything solid here, but I was watching the Dom and there was, again, they started slipping bids in, kind of stalling this out. And I thought the trade back above this was still alive to push higher. So, um, but this wasn't a quality enough entry to yield a full bracket. So a full sequence is the way I refer to it. And so, whereas this entry here was quality enough to have a 10-point stop and to yield a full sequence. And a full sequence is 100 points. Today I cut it 20 points short, but eventually we got there, right? But again, I exited at 80. Um, so I'd say look back over your trading stats, look back over your entries and exits, and just see like, do you need to give yourself more room? Are you stopping out all the time? Um, and it's kind of a web, right? Because also your brackets, like your levels, how you derive levels, um, is going to give you areas of interest. Around those areas of interest, you want to have execution tools confirming, and then you want to be quick to the trigger. And then that combination, like that soup that's made from areas of interest, how quality are they, confirming tools, how well are they suited for your style, and then that the connection or the those two things collaborating together will yield an average, move that you're going to see. And so an average rotation in NQ is about 45 to 50 points. And so for me, if I'm entering at the bottom of a rotation, I want to see at least that. So the bulk of my scales come off up to 40 or 50 points. And then I'm usually holding one for like 70 and one for 100 roughly. So 50, 70, 75 ish, and 100. And then if I'm trading more size, my scales don't get moved out any further. It's just my scales are bigger because if I'm trading 12s, then obviously I'm scaling up. One thing I don't do is I don't leave two runners for a 100-point move. If I'm trading 12, then I'm scaling both. I'm scaling more at 50 points or 70, but I'm not leaving two to run to 100. And if I'm trading like on Friday when I was trading, 20 whatever, I'm still um, scaling that the same way, and it's all going to be front loaded in that first 50 points. Um, Stops are almost always going to be 10 points unless I say something like I'm going to give this 12, or every so often, if we're real wild, I'll give it 15, and then I'll slide my first scales out, to make up for that extra risk. And that's one thing I would say is if you take on more risk based on big numbers, you need to be also taking on more reward. So a little nugget in there about sizing, we can talk more about that, and about scaling. We can talk more about that in another video. But I just wanted to hit that while we were here. Hope you find this helpful. If you have any questions, like always, hit us up, me or Banks or anybody in the Discord. But send us a message and we will do our best. If there's any content you want to see covered, let us know. And I hope you guys are doing well, and we'll see you in the Discord.